Welcome to McPlum, simple solutions served daily.
Open and verify an E*trade account and fund it with at least 00 to begin trading options. Uploading ID and linking a bank reduces delays. Next, request options, trading, and complete the online application where you disclose experience, income, and investment objectives. E*trade evaluates your answers and assigns an approval level that determines permitted strategies and margin access. Approval depends on experience, income, and risk tolerance and determines permitted strategies. Keep documentation handy and expect email confirmation when your options privileges are active. Learn the core terms. Calls give the right to buy and puts give the right to sell a stock by expiration, and strike price and expiration define the contract. One contract controls 100 shares, so multiply the quoted premium by 100 to get the total cost. For example, A, 25 premium equals 25 per contract. Understand intrinsic value, time value, implied volatility, and how each affects option pricing before choosing a trade, and use the options chain to compare strikes and expirations. On E*trade, place trades through the options ticket using limit orders to control execution price and consider stop loss or profit targets to manage risk. Practice on paper first if needed. E*trade charges a per contract fee of /bin/sh. 65, so include fees when calculating position size and break-even points. Monitor positions daily and exit before expiration if you want to avoid assignment or exercise. Close or roll positions, and keep records for tax.
Thanks for watching. Stay juicy and subscribe.